Hello, traders. Gary Wagner here. Approximately 1 o'clock in Honolulu, 7 o'clock in New York. It is the last day of the quarter, Wednesday, March 31st, 2021, and this is the daily report for gold and silver. A dismal quarter for gold, losing about 9.5%. Nonetheless, we saw good activity with moderate gains today of approximately $22. On today's show, we are going to take a close look at support and resistance levels in gold as well as silver and talk about the potential that we have hit, whether it is a short-term bottom or a long-term bottom, the conclusion of this most recent sell-off. We'll do that through our technical studies, which will start now. Although gold gained a respectable $22.60 in trading today. That's 1.34%, closing at $1,708.60. In terms of its quarterly performance, it is the worst on record since 2016, although both are completely dwarfed by activity in one quarter of 2013. The second quarter, we'll look at that on a quarterly chart when we pull up our technical studies. We are looking at an extremely long-term chart of gold using quarterly candlesticks. As you can see, we just opened in Australia, and we opened at $1,709.10, just under a dollar gain from the close of last quarter. We can see that on this quarter we had a tremendous drawdown, approximately 9.5%. The last time we witnessed that kind of a quarterly drawdown was the last quarter of 2016. However, both quarters are absolutely dwarfed by what we witnessed on the second quarter of 2013, because during that period of time, we witnessed gold pricing lose $300, trading from $1,600 at the open of the quarter and closing at approximately $1,225 per ounce. Although it is difficult to derive any useful information by comparing the last quarter of 2016 to this first quarter of 2021, here is what we can say about recent price activity when we look at a daily chart. The first thing is to look at recent lows that we have seen in the marketplace over this year as well as last year. If we go back to last year, we can see a series of lows that come in roughly at the same price point as the double bottom that could be occurring here. It's interesting that we did get a slightly higher low on this sell-off when we compare it to the sell-off that occurred back in March, but whether or not we'll see market prices return to a upswing is something that is a challenging question to answer. If we do compare it to 2016, we have to acknowledge that it took roughly 5 quarters for gold pricing to return to the opening price of that particular quarter. However, what we can say from looking at our daily charts is that really since April of last year, each time the market traded to approximately this level, which is 1680, we have seen it either rebound slightly, as in these two occasions, or rebound and then move to the all-time record top, which is what occurred from May through August of last year. Therefore, while the technicals indicate that we are still in defined bearish territory, we can say that there is a decent probability that we will see gold bounce to the upside from this point based on what we have seen in the past. Silver also had respectable gains today, but they were under the performance of gold, gold gaining 1.34%, silver gaining 1.28%, closing up approximately 31 cents at $24.44.5 to close out the first quarter of 2021. In terms of silver, while we did see a solid gain today, we are trading slightly lower in Australia. And in terms of the various support levels, $24 per ounce, and that is simply based upon this particular low that came in. We have major support at approximately $23 That, of course, is the 38.2% Fibonacci retracement. We're using the same data set that we used for gold, meaning coming in at the lows of March last year up until the highs of August, when we challenged $30 per ounce for a brief moment in time. That being said, the next real level of resistance has got to be based on this series of tops right here, and that comes in at approximately $26 per ounce. In terms of our short-term analysis of the market, we can identify a simple two-candle pattern, simply called a piercing line. It uses only the real bodies of today and yesterday on a daily chart. And the first criteria to achieve this pattern is it occurs after a defined downtrend. We certainly can say that. The first candle has to be a large red candle, taking it to a lower low, and then the market opens below the close of the prior red candle and closes at or above the midpoint, which we certainly can say we've meeting that criteria. That being said, we would not take this call until we had a confirming candle, which would be a large green candle with a higher high, higher close, and a higher low. But to be on the safe side, we wouldn't really be in defined bullish territory or the possibility of a rally occurring unless we get a close effectively above silver's 200-day moving average. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.